Hi, everybody, and welcome to a new segment on Investing Experts, where we're taking a Seeking Alpha analyst that has a bullish thesis on a stock and a Seeking Alpha analyst that has a bearish thesis on a stock. And we're dissecting that stock from those two perspectives and end up getting even further along in our understanding of the stock than a simple bull bearish perspective, because the conversation we have along the way, I think, edifies many points for all participants, and listeners, I think, can add their own conclusions and takeaways. And please put in the comments, either on the podcast platform you're listening to or on Seeking Alpha, any questions you have for the analysts, and let's continue that conversation together. So today we are talking about 3M with CashFlow Hunter, who's been on the podcast before, sharing his elucidations on stocks and the market. As listeners know, he runs an investing group on Seeking Alpha called Catalyst Hedge Investing, and he shares the stage today with Brett Ashcroft Green. They get into 3M. CashFlow Hunter's been on the show before talking about why he's bearish on 3M. He continues that conversation today with Brett, who you may have guessed is bullish on the stock. And all Investing Experts podcast episodes are available with full transcripts on Seeking Alpha. Also, any article mentioned in this podcast will be available on the show notes, which is in the episode description on whatever podcast platform you may be listening to. And if you're invested in the markets, I hope you are listening to our flagship podcast, Wall Street Breakfast, which runs every morning and gives investors a robust taste of what to expect that day in the markets. And this week, we're launching an afternoon edition of the podcast. So those searching for insight in the middle of their trading and investing day, look no further than Wall Street Breakfast podcast. I promise you, you won't be disappointed by the depth of investing news reporting, insights, and analysis. Hope you enjoyed today's conversation on 3M. We've got more bull bear cases coming at you. Looking forward to bringing them to you. Enjoy today's conversation. Okay, CashFlow Hunter and Brett, welcome to Investing Experts podcast talking 3M. Super happy to have you both on the show and super happy to get this bull bear segment started. So thanks for coming on the show to you both.
Thank you, Rena. Appreciate it.
My pleasure, as always.
Brett, I'd love it if you shared with our audience your journey to investing, to Seeking Alpha, what brought you to invest in general, and then also to write about investing.
So, I've been involved in finance and real estate for the past, couple decades, working on the private side of debt financing. And, I never worked really on the equity side. But it's always been a personal passion of mine, investing in real estate, rental properties, and then into stocks in general. As one of the older kind of millennial generation folk, the FIRE movement is a big thing for us as far as financial independence and retiring early. You can't work hard forever. So that's always been my motivation, is just to be frugal, save, invest everything I can, both in rental properties and stocks. And, I've done well so far, thankfully. And, getting to that point where you start feeling financially independent and getting into Seeking Alpha was important, I think, to just kind of express some of my ideas and being able to use the tool set Seeking Alpha has. Everything's really convenient, I have to say, all right there in one spot where I can click on it, cycle through SEC filings, look at kind of the consolidated data for income statements, cash flow statements, balance sheets, and all those things. It's really cool. And every time I have an idea, if I write an article, a lot of that is me working through my own kind of thought process to see whether or not I want to buy, sell, or hold something.
Brett, I'd love to hear from you what your general thesis is on 3M, and maybe if it's a typical stock that you would be looking at.
Yeah, I'm kind of a person who hunts through companies that display that quality of being, good management combined with a high earnings yield. One of the places that I really like to screen through is Joel Greenblatt's Magic Formula. So I've using it for many years. It's very hard to see a dividend king actually pop up on there, and 3M has been consistently on there when I screen for mid and large cap companies. So that really stood out to me. Started going through the screeners, looking at it being an all-time dividend, high dividend yield. Uh, they've been paying dividends for 64 years. We got price to book pretty much looking like close to an all-time low. Price to earnings, same thing, almost all-time low. We're looking at looks like around 2013 prices on this stock. It's the litigation issue surrounding 3M is a big deal. It's creating the opportunity, but I think that the risk reward ratio is leaning more towards being reward than it is for risk at this point.
So, cash flow hunter, what would you say? I guess is your main thesis, and if you want to counter any of Brett's initial points, I'm happy for you to include that in there.
I don't disagree with any of the what he just stated on the statistics as they are right now. My issue with the company, other than I might disagree with quality of management. I don't see this business as management's done a spectacular job with really any of their business lines. If you look at revenue growth and returns on invested capital for going back for the company, none of them are particularly stellar. But I really care more about what the business line is going to be looking like going forward. And everything I see of this company is that these liabilities they face are massive and are fundamentally going to degrade, at the very least, the earnings power of the company going forward, if not potentially put it into severe distress.
Yeah, Brett, what would you say to the massive liability issue?
Yeah, I mean, in my article, I kind of tried to comp that out, doing like a typical Warren Buffett-esque owner earnings model and trying to incorporate about $1 billion into having liabilities for paying out between the PFAS and also the earplug case. That would be equivalent to about $30 billion, comping it to like the Johnson Johnson case where it would be put in a trust and then paid out over a 25-year period. And then taking into consideration, their taxable income is about 20%. I think the net effect would be about $1 billion a year, paying out, as far as the reduction, what we're going to see drop to the bottom line. But also their margins are being compressed right now, I don't believe, because it's a big management issue. If we look at the actual cost of revenues for a lot of companies, especially when you're dealing with raw materials. I mean, in essence, 3M is also a company that deals in petrochemicals, right? And a lot of plastics and such are going to be highly dependent on, oil and oil byproducts. So we're looking at, let's see here, before COVID, 2018, we have a cost of revenue of about 50%, and it's jumped up TTM to about 57 or so. So I think with inflation being what it is, a commodity super cycle, as that tends to deflate more in the macro perspective of what's going on, I think that a lot of those problems are going to resolve themselves, along with, better international relationships, especially, in the Asia Pacific. We have Anthony Blinken over there trying to make good with Xi Jinping right now. 60% of revenues come from outside the US. So it's not just a US story. And then if we're looking at interest rates from a macro perspective as well, they state clearly in their 10K that the strengthening of US dollar is really affecting, currency spreads and those kind of things. So when they're taking in income from other countries. So as we start to pause rates, lower rates, and, our currency is not so hot, I think that's going to also enhance their margins as well.
Cashflow Hunter, what would you say to Brett's bullish take on that?
I have to respectfully disagree on the margin issue. Their margins started degrading in 2019, so that was the year before COVID came along. That's also the year that their returns on invested capital, their returns on assets, their returns on basically any return ratio started declining. So I think it's very hard to argue that we were in a super cycle, either in inflation or in any kind of commodity input or labor cost during 2019. On top of that, several other competitors who, you would argue went through, had basically faced similar margin pressures, show no real margin degradation during this time period. Let's also remember that, these guys, they have a healthcare division, which is reportedly, supposed to be a higher margin business than there's just a typical, the consumer business or their or the other two industrial businesses, that really ought to be insulating that the other businesses that experience those margin issues, and it has not. On top of that, I think that a lot of people do forget, or they don't look at the fact that this is a company that has spent quite a bit of money, net cash, on acquisitions over the past 10 years. They did $3 billion worth of acquisitions in 2015. They spent another net $1 billion on acquisitions in 2017. They spent another $5 billion. This is cash. They spent on acquisitions in 2019, and yet EBITDA has not really materially has not gone up really at all over that time period. EBITDA in 2016 was $8.5 billion. EBITDA in 2022 was $8.5 billion. And last year it was on a trailing 12-month basis, I believe they've guided to about $8 billion for this year. So that doesn't, if you've spent net, north of $5 billion on acquisitions in the past 10 years, cash, forget about shares. I don't think you should be standing in place on an EBITDA basis. And I think that on the liability front, if we're talking that $30 billion, let's say that is going to be the ultimate liability split between the two. I don't think that 30 years is going to be the payout term. I think that's pretty hopeful. I mean, that is a best case scenario.
Well, I put 25 years kind of as an estimation, and then kind of decrease it if it's 1.2 billion by the tax rate.
Okay, I mean, well, on a present value basis, there's not a material difference between 25 years.
Not much, yeah.
So I look at that and I say, okay, well, that is an aspirational time, hopeful liability payout period. First, it seems that the settlement with the multi-district liability case that was negotiated by Chemours / DuPont Corteva is that the payment will be made up front. So that is, perhaps, that's only about, I believe it's $1 billion, $1.2 billion split between the three companies, not evenly. But I don't know why the MDL for settlement for 3M, if the payment from Chemours DuPont is going to be upfront, why their payment of quote unquote at least $10 billion would not be payable upfront. Although it's entirely possible that there could be some sort of payment structure. The problem with the announcement that they made is that there's no detail in it. It's a very odd announcement that you make a detail of. To make an announcement of, we have the settlement of at least $10 billion, and they don't say what percentage of the plaintiff base is going to accept it, what the hurdle rate for the plaintiff base to accept it. Because they said they're opt-outs. Well, okay, they're opt-outs. So that means that the bigger water utilities that can afford to pursue a lawsuit on their own won't continue to do so. And how many of those guys can opt out before the company says, okay, well, we don't have a settlement. And then lastly, there was a PFAS conference last week hosted by Bank of America. And I think it's important to note, I mean, I knew this before the conference, but I think a lot of other people perhaps didn't, and the conference did a good job elucidating everything about the liabilities, was that the liability of the MDL settlement of at least $10 billion, again, is really not very much, doesn't cover very much. It doesn't cover any of the state's attorney general's liabilities. It doesn't cover any personal liability, personal injury liability, any personal property liability, and it won't cover the Superfund liability that I believe is very likely to come through once the FDA gets its hazardous material designation for PFAS in February of 2024 at the latest. So, there you go. And, I also am not entirely sure why the earplug liability would be paid out over a significant period of time. If you look at a lot of the payments into trusts that were made by the asbestos manufacturers, those were not paid out over 30 years. Those were paid out into a trust from bankruptcy over time. If you look at the opioid liabilities, those were not paid out over 30 years. Endo currently is in process of trying to renegotiate its opioid payment liability. It agreed to $1.5 billion, and not Endo, Mallinckrodt, I apologize. Endo had a negotiated settlement of $200 million, but Mallinckrodt had an opioid negotiation that they negotiated with, a very large plaintiff base of $1.5 billion, I believe, and that was going to be paid out over like 3 or 4 years. So everything I see, it points to a much shorter time period.
Sure, fair points. I mean, just quickly, I just don't think there's, as CashFlow Hunter said, there's not a whole lot of detail specifically, especially with the PFAS case, except for comps that we have that are much smaller payouts than what's being tossed around for 3M. I mean, I don't want to say it's hopeful, but I would think at a certain point when you have a company like this, is so important to not just U.S. industrial infrastructure, but international industrial infrastructure, that it becomes a risk to the U.S. economy if you try to say we want $10 billion up front, which is something where you could force an entire company to go into reorganization. But that's also the perfect bear case for the company, is to say, hey, look at the comps. We look historically, a lot of these companies have had to pay out, much faster than this amount of time. The reason why I was comping to something totally unrelated in the Johnson & Johnson's case is because I believe Johnson & Johnson is more of a similar company to 3M, being how important they are to the U.S. economy. I think judges would err on the side of caution because I think they would know what would happen if they really forced a company like 3M to, go in and fund some sort of a trust of $10 billion. Let's even say if it's all $30 billion, if both cases end up wanting them to fund that trust within a period in less than a decade, you could put 3M, under. And I don't think that any judge wants to do that. It's just a bigger.
I don't think any judge cares.
You don't think any judge cares? I don't know. If it was California, I would say maybe something. I know that the PFAS is being held in the Northern District of Florida. So I hope that, they err on the side. Yeah. So I believe that they wouldn't do that, but that's just my own personal opinion.
I just look, if you're looking at history, first of all, I don't think that the talc settlement for Johnson & Johnson was ever in any risk of ever putting that company into bankruptcy. What did they settle for? $15 billion, $9 billion? I don't even know. That's half of what Johnson & Johnson's EBITDA is every year. And it's, let me just look at its free cash flow. It's 1 year of free cash flow for, if the number was $16 billion, that would be less than 1 year of cash flow for Johnson and Johnson. It's almost meaningless from that perspective. In
Yeah,
terms of
that's not the argument, though. I'm just saying, like,
yeah,
exactly. Levered free cash flow for, if you're talking about for 3M, is only about 3.5. So it's a much bigger
yeah,
risk to 3. Yeah, absolutely. It's a much bigger risk to 3M. So, if Johnson even got that kind of a payout structure, I'm just saying, would we want, and I guess your assumption is that judges historically don't care about these things, but is 3M more important to, let's just say, these are all being held in federal courts, right? Are they more important to the U.S. economy than just to say, should we pay out these litigants as quickly as possible? What would the net effect be to the U.S. economy if you're taking out pretty much the widget company that helps everything operate?
Well, I don't disagree that PFAS is a necessary product for a lot of industries. It really is.
Mm-hmm.
It's very necessary for the production of a lot of integrated circuit boards, a lot of semiconductor design, and as maybe as something as broad as you can't build a nuclear submarine without PFAS. 3M's getting out of the PFAS business.
Yeah, they're selling that by 2025.
They're
right?
shutting it down. So the argument of, oh, well, if we put 3M out of business on this, then they won't be making PFAS, and then that's terrible for the U.S. economy. That doesn't hold water because they're already in the process of shutting it down. If you look at historically, the companies that were in the asbestos liability chain, over 70 of them filed for bankruptcy. A lot of them are, as pretty well-known companies with an awful lot of employees, like Owens Corning. Owens Corning has, currently has 19,000 employees. I don't know how many of them they had 20 years ago, but they were still, or over 20 years ago, they're still put in the bankruptcy. Grace put in the bankruptcy. Johns Manville put in the bankruptcy. U.S. Gypsum put in the bankruptcy, and it didn't. Just because I think there is also this thought that just because a company files for Chapter 11 to have to reorganize its capital structure, and in the case of the asbestos liabilities, that it was a way for them to get all of these people suing them into one pool that they can then negotiate into a trust payment. I do believe that is going to be a similar issue with 3M, that there's these payments are really going to start getting to such a level, and fighting the liabilities in court is going to become such a level that they potentially are going to have to file for bankruptcy to get them all into one negotiated pool that they can create a trust for. That does not mean that the jobs at 3M necessarily go away. It doesn't mean that the products that 3M makes go away. It just means that current 3M shareholders and current 3M bondholders lose out. The employees, as long as they're in a business that 3M wants to continue to be in, they still have their jobs. So I don't think that bankruptcy courts are necessarily in the business of, first of all, this is not a bankruptcy court issue. This is a trial judge issue. Mm-hmm. And the trial judge, I don't think they would say, oh, well, yeah, you poisoned a lot of groundwater in a lot of places. So, but we're not going to really hold you fully responsible because we don't want to put you into Chapter 11. I have not seen any instance in the United States where that's been a restriction.
Okay. I mean, those are all fair points. That's part of the risk of 3M, I think, is which side are you on as far as that's regarding? Do you think that, those payments up front are going to end up putting them in the Chapter 11, or do you think they'll be able to continue on and get a fair payment system to where it's not going to affect, EBITDA to a great enough extent, or affect the dividend, which is the most important thing. I think those two things would be the most contentious points. Is that if they if they cut that 64-year streak of dividends, history would tell you, of course, the stock, whether or not they stay in business, in the current structure, that it's going to fall. And that's kind of one of my points as well, is that if a dividend were to be cut, that's usually my only trigger point to be out of something. So,
well, I had actually written to that point in my
Mhm.
piece that if the company is intending on spinning off their healthcare division,
Mhm.
which it seems like that is their desire,
Yeah.
that the dividend becomes very difficult to support if they do that. The healthcare division is the cash flow engine of the company right now. It's 2.5 billion of the $8 billion of EBITDA. And let's assume that that's a relatively low capital intense business. So that 2.5 billion of EBITDA is pretty close to $2.5 billion that's going to be coming off of operating cash flow.
Mhm.
Obviously after tax or pre-tax, tax affect that, it's $2 billion. Then the company on a net basis right now is pretty skinny on dividend coverage. There, it's probably right around $4 billion of cash flow between operating cash flow minus capex. Is that a fair number?
I mean, I'm looking at the dividend being covered by free cash flow. It's pretty close, like
Yeah.
90%.
So if $2 billion of operating cash flow comes off, that dividend has to get cut. Now, the dividend could then be paid. The difference in the dividend could then be paid by the spun off healthcare business.
That's my assumption. Yeah, that
But
would be similar to AT&T.
right, but do investors look at the two companies and say, "Oh, like 3M didn't really cut my dividend because I got stock in this other business that's now paying me the dividend difference." I
Yeah.
don't know. I think that organically that potentially breaks the dividend, which would cause a potential sell-off too.
Do you guys want to talk for investors about the timelines? Cashflow Hunter, I know you run Catalyst Hedge Investing. So, in terms of the catalyst or the opposite of the catalyst that may come from the news of settlements or, finalizing appeals, can you share with investors how you see the timeline or what you think the timeline is set to be?
Look, it's unknowable. The initial announcement for the settlement was when it was June 1st or 2nd or something like that, where they said that they had a tentative settlement, and they delayed the trial by 3 weeks, which was supposed to start June 5th. So I would imagine something has to be announced basically this week on the terms of the settlement, in terms of so that's going to be one catalyst. In terms of getting the the EPA designation of hazardous material, that is going to be a first quarter 2024 issue, I believe. It could come a little bit earlier, but my sense is all indications are that it's going to be sometime around then. And when would they have a potential settlement on the earplugs? I don't know. I think the 3M CEO was supposed to be at the negotiations was ordered to be at the negotiations for the settlement with the earplug litigants. I believe that was either June 1st or 2nd, or the week before that, the Thursday or Friday before that. I'm losing my dates. When does that come through? That kind of could come through any day now as well. And then what's the last one? And then it's really and then there's an appellate court that is supposed to decide whether the lower court, which rejected 3M's petition to file Aero, the earplug manufacturing subsidiary, into bankruptcy. I would expect that decision to come through sometime before the end of June as well. So there's quite a bit that could happen at the end of June. And then the other issues, when do states attorney generals that have seemed to have piled on in the recent weeks, when do they start either having settlement negotiations with the company, and when do those issues start coming to trial? I have no idea.
Brett, what are the points on the horizon that you're looking for to reinforce your bullish thesis?
Yeah, I mean, I think that's the timelines that CashFlow Hunter is discussing are sound accurate. However, as someone who would be bullish on the stock, I mean, that's kind of how we would be sizing our bets. I think is that if there's a positive piece of news, obviously, throw more money on the pot. If there's something that looks like it's going to be more injurious than I originally assumed, then I might hold back. I personally, again, I'm a long-term investor. I'm not looking to swing trade this thing at all. So, for instance, when I picked up Exxon during COVID and it was trading below book value for the first time I ever seen it, dividend on my cost was 10%. It's a totally different situation than this. I think.
Sorry, which name?
Exxon.
Oh,
so
yeah.
I'm just saying, completely different. I understand. I mean, we're in a situation then, oil was trading negative. It was a good opportunity to get in. This is kind of a similar situation. You don't really get any good opportunities without a lot of negativity surrounding it. So if it holds to where the total, litigation issues surrounding 3M, I think hold within that scope of 30 billion across the two cases, and if they get some sort of equitable payout structure over a number of years, again, CashFlow Hunter, I understand, you would look at comps and say that's probably not likely. I would probably think that it would be likely, just because I have a hard time believing that the judges are going to want to put them into a reorganization situation. But that's just my opinion. Again,
yeah, I've never seen an instance where that's been a consideration, really. I just haven't.
Yeah, I mean,
I don't think J&J was a similar situation at all. But
why was there?
I think it could happen.
I mean, yeah. Why? I'm just saying, why would you think that they would be given such a long payout situation? Versus other companies that had smaller payouts recently. We're talking about recent history.
Yeah, well, we don't know what the plaintiffs were demanding. This could be a trust for people who don't have cancer now, but potentially could have cancer because they use the product. All of these water systems that are polluted now need to be cleaned up right now. The money needs to be spent. There will certainly be ongoing costs, but it needs to be spent. Not over 30 years. That is definitely not going to be the case. I could see it being spent over 5 or 10 years, but it's going to be spent because they have to get their water below 4 parts per trillion PFAS content, to be compliant with the FDA regulations that are almost certain to go into effect, in the next couple of months. So I can't speak for what, I don't know the detail, and frankly, I haven't looked that carefully at what exactly the plaintiffs were asking for out of J&J and what exactly their cases were. The trust for the asbestos was set up not just to compensate people who had died of asbestos at the time, people who were suffering from this illness from asbestos at the time, but also people who had exposure to asbestos but had not gotten sick yet. So you can still make asbestos claims against the trust now. If you've recently gotten sick. I mean, look, I know someone, unfortunately, who died of lung cancer, who had worked at an asbestos plant. He died, I want to say, sometime around 2009, 2010, and he had spent a summer working at an asbestos plant in the 60s. So it does take a while it can take a while to come back and bite you.
Sure. Well,
Whereas
I guess the
PFAS
question.
has to be removed immediately.
Okay. Okay. I guess the question I pose to you then is, as far as the earplug case goes, and okay, let's say we know it's around 10 billion for the PFAS case, and that the payout is, we'll call it even shorter, right? Let's call it 5 years to fund that entire thing. Do you
Okay.
have any optimistic hopes that the earplug case would be less than 20 billion? What do you think about that case as
Oh,
far
you
as?
think that it'd be 10 billion for PFAS and 20 billion
I'm averaging those two across exactly.
I think you're way underestimating something. I think on PFAS, the PFAS settlement is just one party suing a 3M. This is just local water systems and municipal water systems suing 3M. It does not cover states attorneys generals that are suing the company for ground pollution and other water. These are water systems. This is drinking water. It doesn't include really a lot of other liabilities that are out there. It doesn't include. I was watching because when the Maine Attorney General sued the company, there's a high school that the kids can't play on the field and they can't drink out of the water fountains. And there's a nearby farm that the farmer is not allowed to not allowed to raise livestock on because of ground contamination. There's going to be personal injury lawsuits. Three of us very likely have high levels of PFAS in our blood. And then there is not there's the real headshot, and I argued this in my first article about the company, I think is going to be the EPA getting the hazardous material designation on PFAS, which means that any place that has more than 4 parts per trillion content of PFAS, be it ground, ground contamination, groundwater contamination, not drinking water contamination, groundwater contamination, that will be designated as a Superfund site, in which case the EPA acts as judge, jury, and executioner, and just says, pay us. So I think that the PFAS settlement was sort of announced, not really announced, is probably only about 20 to 30% of the total liability for PFAS. I think that in a best case scenario, from what I'm hearing with the earplugs, that's going to be about a $5 billion liability. So if you ask me, what's the best case for the company?
Yeah, best case for both cases, and your average number of years to pay out.
Well, I don't know why the ear people would take a multi-year settlement. These are people who have hearing damage now. If you're in your 40s and you have hearing damage now, you want to get compensation for it now. Why are you going to wait until you're 70 to get compensation?
Well, it seems to me the game they're kind of playing is that they keep trying to bankrupt Arrow, right? But it keeps getting kicked out of court.
That's why I said
that enhances the settlement speed, though, right? Because I mean, they see the bills piling up for the defending attorneys. They class action attorneys are probably going to get paid more than any of the people getting the settlement. So they're going to see those bills piling up and see their pie shrinking. I think that's a strategy. I mean, that's pretty common, right?
No, I think the thing that is that is common, but that's not what's holding up the ultimate settlement right now. I think the company has filed a petition to bankrupt the subsidiary. That motion, the petition was denied officially by the lower court judge last week. Their first denial was in August of last year. They appealed the decision, and it's currently in front of 3 appellate court judges, and they should be deciding soon whether they're going to affirm or dismiss the lower court decision. If they affirm it, then the company has the choice to try to appeal it to an en-banc decision, which means all of the judges in that circuit, all the appellate judges in that circuit, can review the case. But they have to. But the entire the judge, all of those judges have to agree to hear that appeal. I guess they could also appeal it to the Supreme Court, but I doubt the Supreme Court would hear that case. So I would expect that if the bankruptcy is denied, which J&J's bankruptcy was denied, and it was J&J kind of announced a settlement almost right after they got denial of their petition to bankrupt the subsidiary. I would expect there to be some sort of settlement, and my sense is that a really good decision would be a really good settlement for the company would be something like $5 billion or less, and not much less than $5 billion, but that would have to be paid up front. I don't see why, if you have hearing loss because you fired a gun, that doesn't take 30 years to metastasize in your system. That happens immediately, kind of, so I don't see why anyone would wait 30 years to agree to get compensated for that.
Yeah, but even let's say it goes over 10 years, possibly, right? That's still, I think, a positive situation for 3M where they'd be able to maintain, their cash flow, their dividend. Probably they're going to have a lot of impairments going forward too, less tax expense. And GAAP earnings are probably going to look shaky if all these things are going on and impairments and such going forward. But I think if they can maintain the cash flow and maintain the dividend, it still remains a very positive story.
But they kind of can't. I mean, we kind of agree that they can't maintain the dividend. I mean, 10 years. Let's say they pay $5 billion over 10 years. That's $500 million, $400 million after tax. That alone, by the way, brings just that one liability, which is, I think, a very generous payment stream and a low liability on the earplugs. That alone would make the dividend only barely covered. And they certainly wouldn't be growing it unless they can start really achieving organic growth, which, as I pointed out, these guys have done, north of $5 billion net of acquisitions just in cash over the past couple of years, and they still haven't been able to grow their top line or their margins. And what else?
My argument was just that the margins are being influenced heavily by inflation. I think it'll be seen, inflation being a big thing, especially if oil prices continue to go down. I'm not a fan. I mean, I am a fan of oil prices going down, but being Exxon my number one holding, obviously that affects that. But if those prices come down of petrochemicals and such, I would predict going forward that their margins would be enhanced just based on that. I mean, it's
I don't know what the percentage exposure is to oil.
Well, just plastics being a byproduct of oil, right? I mean, that's
I mean, there's also the argument. I mean, there are a bunch of other companies that are in the plastics business. If we're headed into recession, which a lot of their performance is already starting to show evidence of that, their numbers are not going to be particularly strong on the top line. Maybe their margins improve because of lower oil, which is going to would be a victim of a recessionary environment too. But this is, to the extent you're betting on this company doing well in its cyclical businesses, I think oil prices would come down because we would be entering into some sort of economic slowdown. If we're entering into some sort of economic slowdown, all the cyclical components of 3M get into trouble. Maybe the healthcare business that has, to the extent it has plastics inputs, maybe it would be a beneficiary, but all the other businesses would suffer. And one other point I wanted to make, I think that the equity is an interesting short on 3M. But as I believe Raina and I discussed in one of our interviews, the credit is just such an easy short, because almost let's say they have to pay $5 billion. Let's say they have to, devil's advocate, they have to pay $5 billion up front and $10 billion up front. That's $15 billion. That's 2 turns of EBITDA on their debt levels. All of a sudden, their debt goes from 1.5 turns to 3.5 turns. So at the very least, 3M is no longer a single A rated company. it's it has the credit profile of a triple B rated company, and that's wouldn't be the end of the liabilities. So I think the bonds are just a layup short here.
Brett, is there anything that would happen? I mean, I know that we've talked about all of these, possible variables. What would prick the balloon of your bullish thesis?
The only thing that'll prick it for me is that if that dividend gets cut for a reason other than the spinoff of as Cashflow Hunter mentioned, the healthcare. I can tolerate that if part of the dividend goes to the healthcare. I keep the healthcare spinoff and I have both components. I'm collecting that. I mean, I'm a long-term dividend investor. I don't long short any of my portfolio. I'm just running my own money. I'm not running a fund. So I'm just looking for opportunities where there's a very negative situation in like a Dow component like this, or a dividend king or a dividend aristocrat. These don't come along very often, and usually when they do come along, they're for a good reason. Again, it's a risk reward thing. If they can maintain their business going forward, they can maintain their the situation where they have basically an equilibrium between capex and depreciation amortization. I mean, there's very few companies, if you look through, and they're usually only the dividend aristocrats and kings, where they have an equilibrium between the capex ongoing and the depreciation amortization. Is kind of like a moat. They have to invest the capital outlay up front. They only really have to replace the assets that they're depreciating and amortizing on an ongoing annual basis. A lot of companies have capex far exceeding that. If that changes too, if I start seeing capex far exceeding, their DNA, that could put some other thoughts in my head. But as it remains right now, I think it's just so undervalued as a stock, as a company. Historically speaking, all the ratios, it's just hard to pass up. I'm that kind of a person. If you call it catching a falling knife, I think that's fine. But I size my bets accordingly. As a certain percentage of my portfolio, I'm willing to lose a portion of it if I have to, because again, the risk reward benefit, I think the reward is so much greater at this point with this price. That's just my opinion. I don't want to influence too many people on that. I think you probably have it split down the middle at this point for the bulls and the bears. So this is not a stock where you would think someone would be irrational for being bearish. I don't think that's the case either. So I really respect Cashflow Hunter's points, and I've looked at that perspective, that this is an existential threat. The litigation issues surrounding 3M is definitely an existential threat. The question in my mind ongoing, especially if I'm comping it to what was happening with Johnson & Johnson, is just the fact that this is a Dow constituent. This is a company that's so important to everything that goes on in the economy, that I just think that something equitable is going to happen for this company. That's my prediction. And all the ratios and everything on a historical basis are so cheap that that's the optimist in me. And that's just who I am. I'm a very optimistic person when it comes to investing. I'm not, again, as I said, someone who does, long short portfolios. So I'm always looking at the optimistic side of it. But again, if that dividend gets cut, if there's a lot of negative news that happens with the litigation going forward, I would probably cut my position.
Let me ask you something real quick, Brad,
Sure.
if you don't mind. Are you at all worried that there's no organic top line revenue growth?
That I think 3M, me personally, being that I feel that they're one of those widgets company, they grow with inflation, right? And
Right.
right now is different though. Right now, I think this situation is different because yes, there's massive inflation, but this is not one of those kind of like ideal Goldilocks situations. We're always shooting for 2 or 4%, et cetera. Maybe I guess 2% inflation is ideal, right? So
right, but we had we can agree that there was about 8% inflation last year.
Yeah, it's been bad. It's like
they weren't able to grow they weren't able to grow their top line in really any of their businesses in the first quarter, except for the healthcare business, which grew 1%. So I agree with you that it is an inflation. It's a business that should grow the GDP plus type business.
Yeah, yeah, exactly.
So if you have inflationary environment, they're at least their top line should be growing with inflation, and it didn't even come close. I mean, a lot of the top line of their businesses was negative. I'd also ask, does that perhaps indicate that they are underinvesting in their core businesses, and perhaps that if EBITDA is if CapEx is the same as depreciation, and yet you're not seeing organic revenue growth, perhaps CapEx is too low?
Well, I would also argue that China has been, I mean, I have strong connections to China. I've worked there for a long time, and I know the economy very well. They've been so shut down over the last 3 years. Them being open again, and I know just walking the streets of China, I've seen several 3M distribution centers and such. That's a big market. That could have hurt their, organic top line growth, just China being shut down, period. So we'll see what happens with that. I'm optimistic about that as well, and hopefully relationships with Asia Pacific, especially China in general, getting better. So I'm still an optimist, but you're right. And if CapEx, if I start observing that CapEx is growing to an extent that it's really outpacing DNA by, let's call it, 120%, 130%, that'll be worrying as well, obviously, right? That's going to hurt free cash flow. Just again, I'm not even going to bring in the litigation issues and what they're going to be paying out, but just looking at them as a business. They're the very typical, dividend king aristocrat, where they have that equilibrium there. They have a brand. But I just think that the rest of the world, especially China, coming back to normalcy will enhance their business and their top line.
Yeah, I think the one thing I would come back with is typical dividend aristocrat. Their depreciation is usually exceeds capital expenditure, but
yeah, it's close.
There's also organic revenue growth, and there definitely should be some sort of revenue growth, or organic or just otherwise. If you've net spent, north of $5 billion just in cash and acquisitions, over the past, whatever.
Yeah. Well, their safety and industrial business, right? I mean, that's their top revenue generator right there. Not the highest margin business, but that has to do with construction. They're big into construction. I think, construction right now is tough. We know that there's that impending commercial.
Well, right now it's tough, but I mean, last year it was 2 years ago, it was gangbusters, right? I mean, it was
sure.
I mean, you look at steel prices. Steel prices went bananas.
Yeah.
You never saw any of that type of growth in 3M.
True. I mean, I see the total safety and industrial business, between 21, 22, basically receding by about, what is it? About 300 million or so. So
yeah,
it's still, I mean, China, I think that's going to enhance things. I'm not sure if we're going to see a recession. If we see interest rates kind of start to recede as well, that'll bring some life back to commercial real estate. So I'm hopeful for those things. I think over time, again, their margins will improve also, just from a perspective of, inflation not being as hot as it is.
I think this has been a fantastically articulate and well thought out conversation. I have a feeling both of you would agree. I have a feeling that anyone listening to this would agree. I thank you both for contributing to that and diving so deep into 3M and into both of your thesis points. Cashflow Hunter and Brett Ashcroft Green. If you have any final words, otherwise I really thank you for this conversation.
I'd just like to say thank you, Cashflow Hunter, for being on here with me, having this debate. I mean, especially your knowledge and detail of all the ongoing cases and the history of litigation as it regards to this is great for myself, great for the entire audience. And I enjoy having these debates. And again, I don't disagree with a lot of your bare historical comparisons here. I'm just the optimist that is looking for the good deals and the falling knives. So
Yeah, I'd echo those points. I always enjoy and appreciate respectful intellectual conversations, and no one's taking anything personally here. So,
Absolutely.
Amen.
Absolutely. Amen.
and you know, the only thing I would say is this is not something that I'm like hoping that this company goes down as this monster. I just I don't see how. I think there are a lot more risks to this company than potential rewards here. And I'd like to reiterate that I don't think that if a company files for bankruptcy that's going to go that the company goes out of business. Again, the jobs are not necessarily lost, provided that they're in businesses that the company wants to stay in, and should stay in. This is a reorganization to handle a massive liability impacts bondholders and shareholders. It does not really damage the enterprise per se. So the company will persist, but if it we'll see. Look, there are a lot of quirks in our legal system. There are a lot of things that can happen, and perhaps I'm wrong. Maybe I'm way too bearish. It's entirely possible. That's why I've sort of spread my bets out between the stock and the bonds, and the risk reward on the bonds is significantly better than it is on the stock. So.
Yeah, I think if the past few years have shown us anything, it's that anything is possible. But and like you said, I appreciate informed and respectful conversations. That's definitely what we're trying to do here. Follow Brett Ashcroft Green on Seeking Alpha. Follow CashFlow Hunter on Seeking Alpha. He runs a group called Catalyst Hedge Investing. If you like what you heard here, you can hear a lot more of that. Thank you both for taking the time today. Really appreciate it. Hope to talk to you both soon.
Just a reminder, anything you hear on this podcast should not be considered investment advice. This is for entertainment purposes only, and you should seek advice from a licensed professional before investing. If you enjoyed the episode, leave a rating or review on your favorite podcasting app, and we'll see you soon with a new episode.